91.5% of Bitcoiners know this simple truth that helps keep the day-to-day price fears at bay. A new browser upgrade is bringing 350 million new potential Bitcoin users into the fray. Bitmain goes big in Texas. Stablecoins might be in big trouble. And Nexus and Cardano updates for you. Now, before I dive into those stories, if you want to start earning 6.2% compounded interest on your Bitcoin or 8.6% on your USD, then you have got to check out BlockFi and put your crypto to work for you. If you have been curious about how these kinds of services work, then click on the link down below to get signed up and to give it a try. And as a bonus, you will get $10 in Bitcoin for free after depositing $100. So, Bitcoin. Today you can still buy 1 million Satoshis for a little more than $80 US. For some reason, the whales are still letting people buy Bitcoin for under 9K. Look, investing in Bitcoin, it's not rocket science, guys. It really just requires being in the game. And look, even if you went all in, which is rarely advised unless you closely follow the market and try to time and then catch the bottom. But even if you went all in, then you have a 91.5% chance of being in profit today in fiat terms, because Bitcoin bought on 91.5% of days throughout its entire history is in profit today. And that's if you went all in. If you dollar cost average with Bitcoin, then your chances of being in profit are nearer to 100% depending on your time frame. Even if you started dollar cost averaging on the day of the $20,000 peak until now, you would be in profit. So worst case scenario is that you have an 8.5% chance of having gone all in at the wrong time, or you have been making weekly purchases and are almost certainly in profit. Now look, obviously, if you can time the market bottom and go all in, then you do you, man. That is awesome. But let's keep it real. Most people do not do that. They've got jobs, they got kids, they got social lives, all this other stuff. They missed that opportunity. That's okay. Sadly, of course, far too many people, they FOMO in, they buy the top, they go all in when the greed factors get really, really high, and they miss that opportunity. Make that weekly or fortnightly or monthly buy for crypto dollar cost average in, whatever your time frame is. But just make sure to be consistent and to regularly stack sats. It's so much easier than you think it is. I made a great video last week discussing how you can maximize your Satoshi stacking game in case you need some inspiration. I will include the link down below in the description where you can get some more ideas on how to successfully stack your Satoshis. Well, there has not been a crazy amount of price action recently. It seems, though, that institutions are starting to take a fresh eye on Bitcoin, with institutional long positions for Bitcoin futures doubling in volume in October, which obviously is quite a big reversal from the kind of the slow fade of September. And look, the truth is, no one knows where Bitcoin is going and when it is going there. There's a lot of educated guesses, though. But the things remain certain. Don't put in more than you can afford to lose. Be patient. Sadly, most people are only interested in Bitcoin when the price is mooning. And they buy the top, and then they expect to get rich overnight. It's not how it works. Bitcoin is a game of the patient taking from the impatient. Look at how the big players trade. Look at how the big players invest. It's usually very, very different from how the average Joe looks at investing. The Bitcoin halving is coming, guys. Stack, sats, and chill. And here's a little extra inspiration for you. There are 46.8 million millionaires. That number is more than twice the number of Bitcoin that can ever be mined. These millionaires have $158 trillion in assets between them, or on average a little more than 3.3 million apiece. And there's not enough Bitcoin for each of those guys to even have 0.5 Bitcoin. Some of that money is already coming into Bitcoin. More of that money will be coming in to Bitcoin. Anyway, on to the next story, and this is a really big one. Opera has become the first major browser to enable direct Bitcoin payments. While I'm personally a fan of the Brave browser, this is still huge because Opera has 350 million users, all of those users who can now send and receive Bitcoin directly from the browser. And they will be able to, of course, use crypto for purchasing goods and services on e-commerce websites natively in the browser. Opera also added support for Tron. The more and more we see native integration in browsers and phones, the better it is for adoption overall, as more and more people will then see Bitcoin as a normal part of payments and as a normal, safe currency. 350 million users are now getting native Bitcoin access via their browser, which is massively big. And this week, HTC has launched an entry-level blockchain phone, which is able to run a full Bitcoin node, which is actually a first for a smartphone. And it's a nice little gimmick, but to run the full node, you'll basically need to be on Wi-Fi the whole time, have it plugged into the wall, and have an SD card with 400 gigabytes on it. So there's that. But nevertheless, this is a cool advancement. Now, to be clear, it won't enable mining on your phone. Not that that would be a good idea anyway, considering how powerful your average phone is. But still, nice advancement, HTC. But you want to know who is doing some serious mining these days? Bitmain. They have launched the world's largest Bitcoin mining facility in Texas, of all places. The project is being built with the help of the Rockdale Municipal District and the Canadian firm DMG Blockchain Solutions. Now, in total, the facility will have around a 50 megawatt capacity and sits on a 33,000 acre site, which can be expanded to a 300 megawatt capacity in the future. Bitmain has cut a sweetheart deal with Rockdale and will be able to access cheap energy to run the machines profitably. This is the second big Texas story in just the last week in regards to mining. And stories like these are firmly putting the USA on the Bitcoin mining powerhouse map. About damn time, America. Welcome to the party, guys. But it is not all sunshine and lollipops in the US, with the US Congress considering a draft bill claiming that stablecoins are securities. The bill would seek to regulate stablecoins under the Securities Act of 1933. Well, officially, this bill is aimed at curbing Facebook's Libra. The impact could be much, much wider, especially on US-based companies like Gemini and their GUSD, and Coinbase and their USDC, although I do have a feeling that JP Morgan's stablecoin would probably be fine, since that's only for rich people. Now, at the same time that that is happening, the Financial Action Task Force has joined the Bank of International Settlements in calling stablecoins a global risk, citing, do I even have to say it, guys? We all know what boogeyman they drag out every time they want to infringe on your freedom. Good old money laundering and terrorist financing. The FATF said that cryptocurrencies are a major strategic initiative for them, and that cryptos whose values are pegged to fiat currencies could have a particularly big impact. Of particular concern is that cryptocurrency could see mass market adoption. That's crazy. They're actually worried that cryptos are going to succeed, because God, they're going to. And that peer-to-peer nature of crypto is a threat to regulated middlemen. We can read this for what it really is. They are circling the wagons around the central banks and their corrupt commercial counterparts, because remember, right now, there are so many anti-money laundering laws and anti-terrorist financing laws, but for the billions spent annually in taking your personal data and treating every regular person with money like a damn criminal, the harsh reality is that global money laundering continues at an unimaginably large scale. Major commercial banks all over the world launder money daily, and they know they're doing it. And they launder the money for the very people passing the laws against money laundering. We've all seen the leaks which tie most major politicians and businessmen and corporations to money laundering. It's not a secret. It's a big club. We're not in it, guys. Now perhaps the banks are worried about losing some market share in this ultra profitable arm of their business to cryptocurrencies, or perhaps it's just the reality that the regulators and their masters are just damn hypocrites. And what about terrorist financing? Oh, please, terrorist financing. The biggest funders of terrorism are country-level actors like Saudi Arabia. But you don't see the regulators taking a stand against those guys, do you? No. Just you. And how does Tether, the biggest stablecoin of them all, react to the hammer coming down? Oh, Tether. Tether is going to launch an algorithmic stablecoin codenamed USDTX. AKA, Tether gives 0 ducks. Not a one. Quack. Details remain scant, but considering that Tether runs on Bitcoin, Ethereum, EOS, and Tron currently, it may actually open up the possibility for traders to use a much wider selection of digital assets as collateral to issue USDTX. Pretty cool. And to round off the news today, a few project updates. Let's start off with Nexus. Nexus, whose highly anticipated Tritium mainnet launch is coming early November, has teamed up with Steve Wozniak of Apple fame and the Wozoo Foundation to launch a new initiative in education, which is going to be built on Nexus. Now, this is a super high-level announcement for Nexus, and it's going to be totally awesome, really, to see exactly what all this is. We don't have many details yet, but to see Steve Wozniak involved, that means it's pretty serious. And finally, Cardano. Cardano, which is seeing its first commercial deployment with New Balance, the shoe company. The pilot program is designed to track the authenticity of the brand's newest basketball shoe. The partnership will basically allow for customers and for retailers to verify the provenance of a pair of New Balance Omnis. And with each purchase, basically customers will receive a real chain card with an embedded identity and security chip, which will allow the purchaser of those shoes to then verify the authenticity on their New Balance app. Pretty cool application. Anyway, guys, thank you so much for watching today's video. I hope you enjoyed it and found the news useful as always. Let me know what you think about any of these stories down below in the comment section. You guys frickin' rock. Thank you so much, and hit that thumbs up. Subscribe to the channel. Do the other thing, the bell thing, guys. Long live the blockchain, and peace out till next time.